ATRIO-FX, Forex Signals and Education Services. ATRIO-FX, Forex Signals and Education Services.
All right, hello everybody. Welcome. I've had an opportunity to speak to a few of you regarding some of the things that you've heard about risk management, and so far I've heard quite good things. But what I'm about to share with you is what's helped me, right? What's really helped me, and been able to kind of take my my trading from one level to another, right? And at the end of this, we'll have a discussion what you guys think, and then we can kind of compare that to what you've heard in the past and so on. So yeah, please feel free to ask a question at any time. If you're not speaking, please mute yourself, just so it'd be easier, and we don't want you to say anything that you don't want to be recorded.
Frank, I think you can mute all participants.
Yeah.
All right, but I want you to give them control of doing it themselves, just so when they want to come on, that they can come on. I'm not quite sure how it works in terms of if I mute them, when they want to unmute themselves, will they still have that control?
Yeah, they will.
I think. Oh, okay.
Yeah.
Sorry, I didn't quite get an answer to that. Will they be able to do it themselves?
Yeah, they can unmute it themselves.
Okay, right.
Yeah.
How do I mute, or somebody tell me?
Let me do it for you.
Go on. Risk management. So the topics are, or the contents of this call is, so we're first going to look at the importance of risk management. So why is risk management important? All right, because it is. And then we're going to go over to look at risk management rule of thumb, right? And then I'll explain what X20 means. We'll also have a look at a risk management calculation that I somehow came up with all on my own, right? After everything and everybody I've been able to communicate with. This is the best way I've come across to calculate risk management, and hopefully I can explain it in a way that's easy, understandable. And guys, please feel free to ask questions, right? Because that's how I will know whether what I'm trying to kind of explain across kind of makes sense or it doesn't. So please do not be shy. Please feel free. There is no such thing as a stupid question at all, please. And you never know, maybe your question might be helping somebody else to kind of understand the topic a little bit better. And then I'm going to go through some examples, right? So I'll explain the calculation and then go through some examples. And then within that, I'm going to show you some examples of my results this week on one of my accounts, right? And then at the end, we're going to have an overall Q&A to kind of see what you guys have thought about the whole thing and so on. So without further ado, let's go. So importance of risk management. Right, so why is risk management important, right? And in terms of skills of trading, where does it rank, right? So everybody's heard about this big pie chart, which explains how much percentage each particular skill is, right? And it, depending on who you speak to, there are, and the amount of skills that kind of fluctuates. Some will say 3, some will say 4. Personally, I have 5. And then again, that's something for another call. But just to be, just for this call, just for this particular call, we want to focus on risk management. And for me, risk management is the second most important skill, right? Number 1 is psychology, right? And then when we come and talk about psychology, I'll explain why psychology is number 1. But after psychology, straight away, it's risk management, right? The reason why psychology is first is because how well you actually handle your risk, how well you trade overall, it will depend on psychology, right? But after you sort out psychology, right, and then you kind of have an idea of what you want to do with your risk, right? Risk is your most important skill. So it's crazy because a lot of people don't quite understand this, right? But it's quite simple, right? Without money in your account, you cannot trade, right? So I don't care what dreams you have, what ambitions you have in trading, right? Going forward, without the capital in your account, you are not achieving those goals, right? Very often I like to use Lifeline as an example of how important your risk management is, right? Because let's say in life, everybody has goals, everybody has dreams, everybody has ambitions. Now, if you're not alive, right, it's near enough impossible for you to actually achieve those goals, dreams, ambitions, and so on, right? Similar to your health, right? If you were, for example, if you were in bad health, or if you were in a coma right now, you wouldn't be here. I don't care how much you wanted to be here and actually be part of this call, get all this knowledge and so on, you would not be here, right? So risk management is exactly the same, right? Exactly the same. It is your first priority as a trader to manage risk, right? Without that, nothing matters, right? Strategy doesn't matter, right? Without risk management, strategy doesn't matter at all, right? Your ability to be able to identify patterns, or your ability to be able to analyze fundamentals does not matter, right? None of that matters. Your risk is your number 1 priority, right? And in terms of risk, one of the things that I really like to drive across, and I use this, so when I was kind of starting to kind of really understand the importance of risk, I had this morning routine, right? And I had this notes in my Microsoft OneNote, and what I would do is go through it every morning. And when I get to the risks, right, instead of saying, hey, risk is the most important skill, right, I'd write little paragraphs or just little sentences to remind me. And I've got 2 of those here. One of them, as you can read, focus on being in the game, so actually being in the market, right, being able to trade, right, and you'll be given an opportunity to take advantage of all the opportunities that are offered in the market, right? In simple English, if you're not in the market, you will not have the opportunity that are offered by the market, right? The only way you're in the market is if you have money in your account, period, right? No matter how much you want to kind of take part in the market, if there's no money, you are not trading, right? And then the second, just before I move on to the second one, an edge. I don't know how many people have read the book Trading in the Zone, or The Disciplined Trader by an author called, oh God, what's his name? It's just left my mind. Mark Douglas, right? A really, really, really good author. And those 2 books I would highly, highly recommend, right? And I think we can talk more about that, on how you can get those 2 books. But yeah, really highly recommended. But anyway, in that book, he talks about what is the definition of an edge. So he defines edge as a probability of one thing happening over another, right, over a period of time, right? So an edge is basically, let's say, your strategy, right? So your strategy you need to have a strategy that will occur, that has a higher probability of occurring. Okay, I'm getting my words mumbled up. So a probability of one thing happening over another. So your strategy needs to have a probability of happening, right, more often than not, right, over a period of time. So it doesn't mean that you need to have a probability of happening right now on every single trade. No, over a period of time, which means a series of trades, right? Over a period of time, you are going to have a series of trades. So in terms of risk management, you need to kind of look at it and say, hey, and have a focus of trading long enough to reap the rewards of your edge. And the only way you can do that is to be able to survive that period of time, that over a period of time, right? So you've been able to take multiple trades over a period of time, right? And by doing so, actually being able to reap the rewards of your edge, because you will only reap the rewards of your edge if you are able to be in the game and trade, right, for a period of time, right? So this doesn't mean, let's say, I don't know, a week, 2 weeks, it's anything over a month, right? 2 months, 3 months, a quarter, half a year, and so on, right? The more samples you have, right, the more likely you are to realize the rewards of your edge, right? The more likely you are to realize the profitability or the probability outcome of your edge, right? So keep that in mind. Trading long enough to reap the rewards of your edge, right? More samples you have, the better your outcome. Just think of the casino, right? The casino is in the exact same business as we are, right? They also have an edge. Their edge is their rule, right? Now the rule, so the rules that they kind of force the players to play by, right? That's their edge, right? They don't worry about let's say they don't worry about the individual games. What they worry about is that collective, right? That series of games over a period of time. So for example, they'll worry about their results in a month, their results in a quarter, their results in a year. They don't even care about a week, right? And it's in their best interest to have as many games as possible, because they understand, right, that the more games they play, or the more games that are played, the more money they will make, right? Because their strategy over time, right, will make money, right? Over time, over a period of time, over numbers of trades, or over a series of trades, will make money. And this is why you're seeing them have all these deals that will convince people to actually go over to their casinos and play and actually play, right? And also hotels, they build this crazy. Look at Las Vegas, right? All those crazy hotels, right? That's all to attract people. Now, if you're in one of those hotels, right, in the evenings, where are you going to end up? You're going to go for a meal, this, that stuff, but where are you ultimately going to end up, right? And they finance all of those hotels, right, with the idea of trying to get people to come in and play. So the more their games are played, the more money they make in the long term. So we can look this in our trading as well, because you'll have an individual who will take, let's say, I don't know, 10 trades, and they'll be like, yep, this is my sample. Really, it isn't, right? Really, it isn't. So the more you trade, right, the more likely you are to actually reap your rewards and actually reach that probability level that you're seeing in your results overall. So that's pretty much it for this type of content. If anybody has any questions, they can stop me now, or they can save it towards the end, and we can have that discussion. So just let me know. So risk management rule of thumb. I want to ask you a question, right? The way that you're trading at the moment, can you lose 20 times in a row, right, and still be okay, right? Can you lose 20 times in a row and still be completely okay? Okay, in terms of, would you still have money left in your account, right? And would you mentally be okay, right, if you lost 20 times in a row? I'm not saying that this will happen, right? But this can happen. Anything can happen in trading, right? Anything can happen in trading. And the reason why I've risked different account sizes here is because it's quite difficult to follow. So when you're being suggested, hey, risk 1%, 2%, 3%, it's quite difficult to follow that method if your account is small. But that it's very, very important that you do follow it, because what you're doing is creating a habit going forward. So yes, you're starting with a small account, but obviously you won't be there forever, right? So when you're following that rule of, let's say, 1%, 2%, 5%, whatever it may be, right? You need to really be able to stick to that and create that habit, right, of following that specific rule. So when you do grow your account to, for example, 10,000, right, that habit of you risking a particular percentage is there, and it's well drilled in, right? And there's one thing I heard about a habit and how it's defined. I think it went something along the lines of, a habit is too weak to fail, right, until it's too strong to be broken, right? You don't want to get to a point where a habit is too strong to be broken, right? And it's difficult to feel it because obviously it hasn't gotten that strong yet, but you don't really want to get to that point. So one of the ways that you can kind of get in front of that, get ahead of that, is really trying to stick to a particular percentage at a time when your account is small, right? And there are so many different ways that you could trade right now. You really don't have to start with 200, 500 or 1,000. You can start 10,000 plus, right? And we'll talk about that in other calls, because that's not what this call is about. So if you had an account size of $200, right? And somebody says, hey, if you were to risk 20 times in a row, would you still be alive, right? Now, for that, obviously, it's difficult, right? It's because if we work out, let's say 10% is what? 20. Right? Somebody correct me if I'm wrong, but 10% of 200 would be 20. So 5% would be what? 10, right? Now, in that particular case, if you lost 20%, if you lost 20 times in a row, and you were risking like $10, obviously that would wipe out your account. So maybe you need to go and risk $5. Maybe you need to risk $2, right? Maybe, right? And I'd suggest that highly, to be honest, if that's the level that you're at, right? If you are at $500, right, 10% of that is 50, right? 5% of that is 25. So 20 really, I don't think you'd survive that. Well, clearly not if you're risking 25. So maybe risk, I don't know, $20 or risk 15, $10. That's completely up to you. It's not up to me to tell you how much you should risk, right? And at the end, I'd have some sort of a recommendation of how much is a good idea, right? But it really depends on two things. Number one, how much are you willing to risk? So you yourself, what is your risk appetite? Different people have different risk appetite, right? Some will have $200 as just like an educational fund. So they think, I've got this account, whether it's 200, 500 or 1,000, just for me to just learn about the markets and so on, right? But some will have that as like their actual starting capital, right? So depending on what situation you are in, you would risk a different amount, all right? An account size of 1,000, right? 10% of that is 100, right? 5% of that would be 50, right? So if you were to risk 50, right? If you lost 20 times in a row, you're below. So instead of 50, half it, right? Half it. So go to 25, right? And then even if you do lose 20 times in a row, then you're still in the game, right? Remember, like, focus on being in the game, and you will be given an opportunity to take advantage of all these opportunities that the markets are offering to you every single day, right? And there are opportunities every single, as long as that market is moving, there are opportunities, right? As long as people are buying and selling, there is an opportunity. It's just whether that opportunity is what you're looking for or what you're looking to identify or not, right? And so on. So again, so always ask yourself, right? If I lose a particular amount, such as 20%, such as 20 times, right? Would I be able to trade, right? Would I have enough money left, right? And remember, you don't have to trade your own money. For example, when I started trading, I was under the idea that I had to trade my own money to get to a particular level, because I think around those times, I say around those times, it was only 2 years ago, I hadn't known about having funded accounts, right? So what I was thinking is, hey, for me to join a prop firm, so a firm that would actually fund, that I could actually trade for, right? I would need to create a track record, right? And for me to be able to create a track record, I would need to first get my account maybe up to like 1,000 or 4,000, and then actually start to have that track record, right? But then I found out, like, hang on, listen, there are other opportunities out here. For example, there's a company called FDMO, right? And this works with I wouldn't say beginners, but intermediate traders. Now, you can get to an intermediate level without risking your own money. So for example, just start a demo. You can start with whatever funds you have. As long as you treat that demo account as your real money, right? You are picking up the same experience. You're picking up the same knowledge. You're racking up the same qualities going forward. So when you are taking a challenge for a company such as FTMO, right? You would be able to showcase this, because the money doesn't matter. Your account size doesn't matter. What really matters is the skills that you have as a trader, right? So psychologically, how are you, right? Risk management wise, how are you? Your ability to kind of spot patterns and stick to your strategy. How good are you, right? Your ability to grow your account over time. How are you? Because there are certain people that don't, like, psychologically don't believe that they deserve a large amount of money. Now, when those people get to a particular number, they can't go forward, right? And that's not something that they can control until they change that belief in their psychological, like until they change their mentality, right? And this happens so much, right? And this happens even with professional traders, where they're unable to get, let's say, their 7-figure mark, just because they've never been able to see themselves earn that type of money, right? And once they see like a performance coach and he kind of diagnoses them or kind of runs his analysis and whatever, he figures that, hey, this person, their self-image doesn't allow them, right? Doesn't allow them to kind of go over. So when they get close to that particular number, they start making mistakes without even knowing it, right? But somebody else obviously can look at that and know. And that's how they're able to get out of that. So, yeah, the money doesn't make you. So it doesn't matter whether you start with $50, right? $30, I don't know, 200, 500, 1,000, 10,000. It really doesn't matter. What really matters is the skill, right? What really matters is the skill. And I would suggest anybody who hasn't been trading who's been trading for under a year, put your money aside, right? Put your money aside, because the skills that you pick up, they will allow you to make more money, right, than you can actually start off yourself, right? And we've got all sorts of different links and opportunities that we can share with you, right, on how you can get to the stage of where you are starting with a funded account. And this is the information that I really wish somebody could have told me, right? Because I would have never risked my own money. I would have just been in a demo for a year, right, and actually practiced growing my account, practiced risk management well, practiced my strategies well, right? And I did spend some time in risk in a demo, but I wish I'd have spent more time, right? Because the money that I risked, and of course I didn't lose it all, but the money that I lost, right? That could have been in my pocket. That could have helped me fund the whole process of being a funded trader, right? So for example, as a funded trader, what a lot of companies want is they will charge you to take the evaluation. So for example, $500, depending on the account size. So $500 or $200 or whatever it may be, and then you take the challenge, right? And then after that challenge, if you pass the challenge, right, there is no more fees. They just fund your account, right? So after you've actually proven that you're able to trade, right, that's it, right? There's no more fees, right? So yeah, I wish I did that in the beginning, but I'm here now, and that's the information that I really want to kind of outlay to you guys, right? That your accounts balances do not matter, right? You don't have to make money today. Really focus, right? Focus on your skills as a trader, right? Money is a byproduct. Money, if you're good enough, money will come. So for example, if you are valuable to the company that you work for, they will pay you more, right? If you know what you're doing, people will hire you regardless, right? And money will come. Money is a byproduct. Always remember that. So if we have anybody in the group who's hearing this and they are trading an account that's really small, right? That's fine, right? But do not focus on the money. Really focus on yourself. Really focus on your ability in order to trade. Really focus on the skills that are required, right, to be a successful trader, right? Which is, again, another call for another time. So off to that. So when you are considering risk management, there are different strategies, right? And I've come across quite a few strategies. I think there's probably the most common one of ways to spreadsheet and use entering the amount of money you have in your account and the percentage that you would like to risk, and it kind of works out the lot size that you need to risk for every single trade. But what that works well. I'm not going to downplay it. It works well. Even I've used it. But when I was using that, what I found out was I was being asked to use the same lot size over a number of trades, but those numbers of trades were of different pairs, right? Different pairs have different volatility. So what you would be so dollar value. So if you were to risk, hi Alfred, if you were, is there a way I can disable that? I'm not quite sure, but anyway, hopefully in this call there aren't many of that. Sorry guys. 5 on AUD CAD, right? The dollar value behind that is different to if you were risking 0.5 on GBP JPY, right? Even though the lot size is the same, but the dollar value is different. Now you don't manage lot sizes, right? You manage money, right? It's called money management. It's not called lot size management. So what you need to really have an interest on, really prioritize, is the money value. So don't care about the lot size, really care about the money. And then I found out how I could do that, right? And it worked out very well. And I've been able to use it. And ever since using that particular method, which is what I'm sharing with you now, I've always been able to keep my risk, or so let's say my losses, at a particular number. And I will show you that with some of the results I've been able to achieve this week, right? So the first question is, how much are you willing to risk dollar value? That's always important. So again, this is where your percentage comes in. So if let's say we wanted to risk 2%, right? And our account is, I don't know, let's say 200, right? Oh, bye Alfred. And our account is 200, right? So 10% of 200 is 20. Divide that by 5, I think it's 4, right? Somebody correct me if I'm wrong. So that you want to risk $4 in this particular trade. Great. After that, ask yourself, how many pips is your stop loss, right? And again, forget about 30 pips, 40 pips. Forget about the number. Just find out how many pips is that particular stop loss. Different pairs, right, will have different numbers of pips in the stop loss, right? Even though it's the same strategy, right? But depending on exactly how that pattern has appeared, right, the size of the stop loss will be different, right? Depending on how volatile that particular pair is, the size of the stop loss will be different. So you just care about hey, this is 50 pips, or this is 30 pips, this is 10 pips. That's the only number you need to care about. Don't care whether or this pips is too high or it's too low. Forget that. Just collect the number. That's it, right? And then the last question: ask yourself, what is the worth of 10 quoted currency in the currency of your account? So, for example, you have let me get this guys out of the way. For example, I think a lot of people, their accounts are in dollars. But for example, when I started, my account was in pounds. I know other people, their accounts are in euros. But you would need to convert that quoted currency into the currency of your account, because your account is the one that's actually everything is kind of transacted from, right? And an example of that, just overall the calculation. So it would be your dollar value, right, divided by your numbers of pips. So let's say 10 or 50, whatever it may be, and then 10 quoted currency, right? That will equal your lot size. So with this calculation, your lot size will be dependent on your particular pair and that particular number, that particular move, or that particular, let's say, strategy, or that particular opportunity, right? And that particular number of pips. But what will always be the same is your dollar value. So no matter how many pips you're risking, right? No matter how big or small that stop loss is, as long as your dollar value is the same, right? You will only lose that much, or you will only risk that much, always. And I'm going to show you what that looks like, and how I've done it this week, right? So we have an example here, right? AUD CAD. So we want to risk $30, right? Our stop loss has 40 pips, right? It could be 50, 60, whatever. We chose 40. Now, is 40 too small, too big? I don't care. I really don't care, because I'm focusing on my dollar value, because that's what my account, that's what I manage. I don't manage the pips. I don't move the market. So forget about the pips. It could be 100 pips, my stop loss. It could be 50, it could be 200 pips. I don't care. I manage the money. As long as my dollar value stays the same, that is all that I will risk, right? So it's 30 divided, so it's dollar value of 30 divided by the stop loss number of pips of 40, right? And then 10 quoted currency, right? In the currency of your account, right? Let me just quickly show you how you can find out that particular number. So for example, that's what AUD CAD. So we're dealing with CAD. CAD is the quoted currency, right? So let's say, I did this earlier, right? So 10 CAD in USD, right? 7.45. That's how I worked out. Okay, wrong one. That's how I worked out this particular number. So I didn't make this number up, right? Just ask Google. You've been asking Google all your life. Yeah. So, and if your account was, I don't know, GBP, right? This is a number that you need, right? If your account was Euro, right? This is the number that you need, right? So quite simple, nothing complicated. So 10 of that quoted currency in the currency of your account. So in my example, it was USD, right? USD. Oh, so it's changed. Great. So 738. Now I can't change that now, but yeah. Do you know what? We'll change it. We'll change it. Doesn't matter. So let's say this is what I used earlier. Let's just make that big so everybody can see, including those holding their phone. So it was 30. So the amount of money that we are willing to risk. And again, this is what matters the most in this. This is what matters the most. Divided by our numbers of pips, which was 40, divided by, is it 7.35 or something like that? 7.38, which is 10 of CAD in our quoted current, no, in the currency of our account or our capital. Did that thing just disappear? Yeah, it did. Okay, try that again. 30 divided by 40 divided by 7.39, I think, equals. So these, right, that right there is your lot size. Now, for example, if you were saying, hey, I want to You know, my other opportunity, right, is risking 40 pips. Okay, so what we do is you'd go 30 again, because 30 is all that you want to risk. You don't care about anything else. You manage money, so you manage this number right here. 30 divided by 50 divided by, let's use the same pair, which we know 10 of CAD in our quoted currency. No, 10 of CAD, which is the quoted currency in our, oh God, people are waking up. We know that 10 of CAD, and CAD is the quoted currency in the currency of our account, our Forex account is 7.39. So divided by 7.39 equals, boom, right? Now, oh, hold on, where is it? 30, 50. I'm a little lost. Where's my answer? Because it's not this. Oh, okay. The calculation's carried on. Let me just wipe the whole thing. Right, so let's do it like 30, 40. 40 is the amount that we're risking, divided by 7.39. 1.0 or 0.10. Now delete everything. All right, give us a brand new calculation. 30 again, divided by 50. Oh, okay, messed up again. 30 again. That's all we care about. Divided by this time, let's say 50, right? Divided by 7.39, right? So whereas before we got 0.10, now we're getting 0.08, right? So the lot size is dependent again on the particular opportunity, right? Which could have a different numbers of pips in terms of risk, right? But that does nothing about the money that you are willing to risk. So with this particular strategy, if you lose trades, you will only lose what you wanted to risk in the beginning, what you had actually accepted to lose in the beginning. You won't have your account with, let's say, you won't have your account losing a different amount, right? That will never occur, because with this calculation, all you are controlling the money, and you've been controlling the money from the word go, which is $30, right? So I'll quickly jump onto an example, and we can have a look at that. So where is the presentation? There's problems of having so many windows open. So okay, I'll just go to next. Right, examples, right? So this week, one of my accounts, I wanted to risk, where are we? I think I wanted to risk 500, so $500 per particular strategy. And I think this is one of my FDMO accounts, right? And that is 0.5, or I think a lot less than that, 0.5 of my actual account. So for example, if you have an account that's 100K, right? 1% of 100K is 1,000, right? I'm risking 500, right? Which means I'm risking 0.5. Now that's for me, right? I'm not saying that is what I suggest that everybody risks, but that's for me regarding, and that's dependent on many things. What FDMO is allowing me to lose in terms of a period of time, and what I'm comfortable with, and my trading plan, right? Which again, another conversation for another call, but a call that we will definitely have. So anyway, I wanted to risk no more than £500, right? Now, what you're seeing here is numbers that are very close, right? Very, 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 very close. Nothing is over £500 here, right? Now, these are different trades, right? Different trades with different lots, with different numbers of pips in terms of risk, right? And also what you're also able to see, the lot size are custom to that particular, right? To that particular opportunity. I don't know why that's not staying on the screen, but okay. Anyway, so that's the first trade, right? A lot size of 2.02, right? Another trade, a lot size of 1.10, right? Another trade, although it's US CAD, but the opportunity gave me, sorry, the stop loss of that particular opportunity was a different amount, right? Yeah, so different lot sizes, but what stays the same, what I am paid to do, manage risk, is this, exactly the same. This is what matters to me. Lot sizes don't matter to me. They don't matter, and they never should. And when I figured out this way, because before what I was seeing is I would keep this the same, or this stuff would be the same. Let's say it would be 2, 3, 4, 5, whatever, right? But this here, what actually matters, right? What actually matters would be completely different. Would be completely different. You'd have 500, you'd have 300, you'd have 400, and you're thinking, huh? What the hell is going on? But all that time, I was focusing on this, when what really mattered was this, which is why this particular calculation works, right? And then what I'm going to do is actually find these trades. All right, why not? Come on. So usually I take a copy. I actually calculate the trades before they go on. So here's what you're seeing. FTMO, right? Like I said, where is it? USD CAD 2.02, right? So for this particular opportunity, right, I wanted to risk £500, like I said, right? Its pip size was 33, right? And that on that particular day, right, 10 of US dollars, 10 of CAD got me 7.49 of US dollars, right? So let's just verify this really quickly, right? Let's just run it through on here. So I'll make that small, so it's side by side. Yeah, and unfortunately I did lose all those 3 trades, which happens, right? It doesn't want to move, okay. Or am I dragging it from the wrong? Do you know what? Nah, it still doesn't want to move. Anyway, you know, let's use this as a, because OneNote can actually calculate things on its own. So, you know what? Do that, and then I'll do it at the bottom as well. So we do 500, right, divided by 33, which is the amount of pips, divided by 7.49 equals, right. So this lot size right here is the exact lot size, right? So 0.02 that you are seeing right here, right? The exact same lot size, right? Now let's have a look at another opportunity, right? So with me risking this particular lot size, right? That was how much I was willing to risk, right? 500, and it came just under that. Fair enough. That's good for me. Now we also have another USD CAD. Now this USD CAD, again, another opportunity in USD CAD, right? 65 pips was the stop loss. So I did the exact same thing. I said, hey, I'm only willing to risk $500, right? But this time, right, this particular time, the numbers of risks, or the amount of pips in my stop loss are 65, right? Great. Now, how much 10 CAD can I get it in the currency of my account, which is US dollars? So how much of 10 CAD can I get in US dollars? I got 7.49, right? Boom. 1.02. Okay, so I open my MT4, right? Made my order, 1.02. There it is, right? There it is, just over, but that's fine. It's still around that particular number. That's absolutely fine. Me going over by $7 is absolutely fine. What's that? 1%, considering I think one. So 50. This is where my maths comes in. So yeah, so $5 is 1% of $500, right? So it went over by 1%. That's absolutely fine, right? Because these 3 overall, although I want, yeah, so overall I was willing to risk in those 3 trades 1.5, but these 3 don't equate to 1.5. So I'm actually under what I was agreeing to risk, which is good. But remember, I manage money. I don't manage the risks. I don't manage the pips. I don't manage the lot sizes. That has nothing to do with it, right? And from this, you can see there are 3 different trades, right, that have 3 different types of lot sizes, right, that have 3 different types of pips in terms of what's that, right? I'm starting to run out of words. In terms of stop loss, but the loss or the risk in terms of dollar value was exactly the same, right? Exactly the same. And last one, what's the last one? Chief JPY. How many risks was I risking for that? 50. So you got 33, 65, right? 50 pips, right? Simple stuff. 500, which is what I want you to risk. 50 is the pips, is the amount of pips in my stop loss, right? And then how much JPY? Wait, no. Something else has gone in my head. So how much of so 10 of JPY, how much does that translate to or transact to in terms of USD, which is my particular account, right? 10. Now with JPY, right, you always use the number 10 because JPY has some crazy calculation. It doesn't even make sense. I'll show you, right? And I learned this. I know. So if you say 10 JPY in USD, right, you get a crazy number, right? You get something like this, but forget this, right? Just enter 10. That works out well. And obviously, you're seeing it right here. So where are we? So divided by 10, right? Okay, now it's giving me a different number. Oh, okay. I know why. Yeah. So anyway, so using 1.2, so I learned that 10 isn't the exact value, but 10 was the closest value that would have still given me the amount that I was risking. But I also learned that I had to take that amount, right, and add, I think it was at 25% on top, right, which is what you're seeing. Sorry, not 25%, 20% on top, which is why it's 1.2, right? So that 1.2 that extra 20% that I added on top of what I had on top of the lot size that I had received initially, that came. So when that trade was lost, okay, not iTunes, right? When that particular trade was lost, so here's the trade. Oh, okay. I didn't even do 1.2. I did 1.1, and that might, you know what, that might explain why this is not 4,500. But either way, it's under 500, right? Either way, it's under 500, right? So you're seeing 3 different trades, right? 2 different pairs. All trades have a different number of pips in terms of their lot sizes, right? But your money value, what actually matters to you as a trader, right, is roughly the same, right? Roughly the same. So yeah, what else is next in this point interview? So okay, that starts a new one, right? Let's delete that. So whoever's editing this, they can edit that part out. But anyway, so that's pretty much it, right? That is pretty much it. So your dollar value divided by the amount of pips in your stop loss, right, divided by what is the worth of 10 quoted currencies. So quoted currency is always the second currency in a pair, right? So what is 10 of USD CAD in the currency of your account? In this particular example is USD, right? So 10 of USD, so 10 CAD in USD is 7.45, but now it's 7.39, right? So yeah, guys, that's pretty much it. right? It's quite simple. I'm not going to tell you exactly how much you should risk, but I really want you to ask yourself this question right here. Can you lose 20 in a row and still be okay, right? Can you lose 20 in a row and still be okay? Again, I also want to illustrate, right? The amount of money in your account doesn't matter, right? If you're a good trader, you will make money, right? Especially if you're with, especially if you're working closely with me, Dennis, and Martin in our group, you will make money. It is our aim that you make money. It is our aim that you are funded, right? So we will use all of our contacts, all of our opportunities. I don't care where you are in the world, right? To get you that opportunity that you are funded, because there are other companies that will only fund traders from a particular country, right? With our contacts, right, we can get you funded, but you need to be a good trader. So forget about the money in your account, whatever it may be right now. It can be $50, $30, it can be 100. Forget about that, right? Work on your skills as a trader, and you will grow your account, and you will be able to manage an account that minimum is 10,000 minimum, right? And then share the profits, right? So yeah, does anybody have any questions regarding what we've quickly gone over? I don't believe I need to unmute anybody, do I? Yes, if you do have any questions, just unmute yourself. And nothing is like, there's no such thing as a stupid question. Right. I should have seen that comment.
That was one awesome call over there on risk management.
Okay.
Yeah.
Which part? This one?
No, the whole presentation, I just liked it.
Oh, okay. Yeah. Okay. So you were able to find value, yeah?
Very much.
Okay. Would you say it's giving you an idea of how you can go ahead, how you can risk or use risk management in the future?
Yeah, definitely.
Okay.
Because as you are going on, I've been backtesting on last week's setups.
Yeah.
And with this kind of calculations, we could be holding so many pips right now.
Okay. But yeah, I think what I'm also trying to kind of push across is forget about the pips. You don't manage pips. You manage money.
The risk.
Right? You manage the risk. And that risk is in terms of money. So I don't care how many pips a stop loss is, it doesn't matter. Because I've just showed you, hey, 3 different traders, right? 3 different traders. Three different trades, and you are able, right? You are able to risk that the same amount that you had wanted to risk from, so basically the same percentage of your account, right? So please consider that going forward, that you are managing the money rather than the pips. It's great to think about pips, right? Because obviously that then can translate into money, but the first thing that you need to worry about is the money.
Yeah.
Absolutely, because the pips, that's the market does that, which you can't control, right? So let the market do what it manages. The market will never manage your money. It is your number one priority to manage your money. For you to make money, you've got to have money in your account, right? Which is why risk is so important. So I hope there is some value going forward. Does anybody have a question regarding the calculation? Does it make sense? Is it something that you could take from today and actually try? Or is there something that I can configure? Oh yes, it does. Okay, that's pretty cool. All right, nice one, Trill. Anybody else? Absolutely, Lucas. Keep focused on your money. Your money, 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 money. Listen, the market opens in about what, an hour or so. So just pick any, just obviously, just open a demo account, right? Hopefully you all have a demo account at this particular time, right? And just try it out. Don't even wait for your opinion. Just try it and just put in a limit order, right? An order that's not executed right now, so a pending order, limit order, or whatever type of order, right? That's far away from where the market is right now, and just test it. Hey, I want you this particular amount. I don't know, 200, depending on how much is in your demo account. This is the amount of pips, right? And this is the amount of the quoted currency or 10 quoted currency in the currency of my account, right? And just see, and then try it with different numbers of pips, right, in your stop loss, and just see how much you're risking, right? How much you're risking in all those trades, right? Literally just see. So move your stop loss. So once you've executed the trade and it's an order, move your stop loss to the amount of pips that you've calculated, and then move your with your cursor, hover over the line that represents your stop loss, and it will tell you the monetary value that you are risking, right? And see if that doesn't result to this particular number right here, right? Just give it a go. Yeah, Joy, that's cool. I'm glad you found it helpful. From your calculation, is the result what should be the lot size? Correct. Yes. Which is why we went over this part. Forever updated. Which is why we went over this part, right? Because, for example, this is that result right there, 2.02. So for USD CAD, let me review, is what you're seeing USD CAD here, right? 2.02, right? So yes. Any more questions regarding risk management and what I've quickly gone over? So I take it makes sense to everybody, and everybody from today is able to kind of just go and try it. I'm not saying go use it. I recommend that you use it. I advise it, but whether you take my advice or not is another thing. But what I do absolutely recommend is that you try it. You test it in your demo account and you see, right? You see what this actually results to. Right, because that's the most important thing, and get some confidence, right? Get some confidence in kind of just remembering that calculation, right, in your mind, right? That hey, it's just this, that, boom, right? So yeah, that's about it, guys. That's about it. Now I think Dennis, you've been using this for the last, I'd say, months or so. Month. What's your experience like?
So yeah, I've been using it, and it's really awesome. It keeps a constant loss in your trades, and at least you can also you can have the confidence of holding a trade to a sell to TP without closing it early or
yeah, absolutely. And that's the purpose of this, right? And clearly you can see, right, that this is practically, right, it's practically the same. And that's what matters the most to you as a trader, the money, right? Got something. Keone, will you share the slides with us to refer? Yes. Now, what we've done is that we've opened this call to everybody, but really and truly, this type of knowledge is only available to the guys that are in the premium group. So for the individuals that are in the premium group, they will have a copy of all of this, and they'll have a copy of everything, because this is the type of value that they receive as being part of our premium group, right? So yeah, so if anybody isn't involved in the premium group, this type of information and much more is what's available in the premium group. Now, we could have said, hey, for example, I live in the UK, right? And if you wanted to join an organization here that was kind of teaching somebody how to trade and that's delivering all this value, right? The average cost is above $150, right? So obviously, I think at the moment I'm not quite sure what the premium is for us. I think it's about $35, right? Now, obviously, with that number, we've taken into account, right, where we are in the location and the exchange and whatever. But it's still quite cheap because I have friends in Kenya and Tanzania who have similar establishments, and their fees are much higher, right? The reason why ours is so low because most of our money, right, is actually made from trading, right? So we don't actually make any money from the fees that you guys pay. But what that money does is basically just run all the services that are in the background, whether it's the websites, whether it's this, whether it's the Zoom call. Because, for example, for us to use Zoom in this particular time, for this particular length, it needs to be a pro account. So how is that paid, right? So the money that comes in from your fees basically just runs the services. But we as admins or we as mentors, we don't actually make any money from this. I have 3 accounts, right? Which in total, I think it's just under $300,000, right? So I make a lot more money there than I can from this, right? Which is why I actually have no interest. And that's the same with both Martin and Dennis. They have their own accounts and they make money from that. So we actually don't need money for, we don't use the money that we receive from your fees as something to say, hey, we're going to put this in our pocket. It's just to cover the services, because what we don't want to do is put the service on for you, but also be it and also have it in our cost. It doesn't make sense, right? We're nice enough. But none of us are Mother Teresa and so on. So yeah, and I'm sure, will you share the slides with us? Okay, thanks. All right, cool. Does anybody have any other questions? Okay. I think this is about it. But I hope there's been some value to you guys. I really do, because yeah, this is something that's given me a lot of values over the years, and it's still something that I do every single day, right? Every single day before I enter a trade. So yeah, so that's it, guys. Thank you for coming. Thank you for attending. For those that are in the free group, obviously this was your opportunity to kind of pick up this value. And hopefully, yeah, you going forward, you use it and let us know how it works, right? Let us know how you're getting on using it and what kind of experience you have with it. And yeah, let's talk about it, right? Let's talk about it. So, one last one. See, I'm still fresh with this Zoom stuff. Thanks much appreciated. Thank you, Coney. Much appreciated from our side as well. All right, guys, please let's end it here. I know it's late where you are, or some of you are probably going to stay up a bit longer to kind of see how the market's open.
ATRIO-FX, Forex Signals and Education Services.